It's been 8 months since we came into office, but I'm happy to say that 8 months down the road, we have turned the corner. Ghana is back. Inflation, we met it at nearly 24%. Currently, it's down to 9.4%.
What does the latest news from the International Monetary Fund, IMF, means for your wallet? As we speak now, Dr. Johnson Panetesiama, yes, most of you won't know his real name. I'm talking about the governor for the Bank of Ghana. He is in the Washington, D.C., and he had a meeting with the IMF. And in the course of this meeting, he was speaking out and also breaking down his points on the economy and also the exchange rate. Kindly stay tuned from the beginning of this video to the end, because on this episode on 69 TVGH exclusive news, I'm going to take you through everything you need to know. I mean, everything you must know as a Ghanaian, as a concerned Ghanaian. Everything you must know about this particular meeting, I'm going to take you through. Without wasting my time, let's go and watch the video, a little part of the meeting he held with the IMF in the Washington, D.C. But before we do that, kindly subscribe and also like this video, turn on the notification bell so that whenever I upload a new video on 69 TVGH exclusive interviews or exclusive news, you will get notified and also you will update yourself. So let's dive into it and watch a little bit of his meeting with the IMF. After that, we will talk more.
It's been 8 months since we came into office, and just as you said, we came to meet a challenged economy. A challenged economy in the sense that, remember, we had the domestic debt, issue in 2022. Fiscal policy was highly expansionary. It led to us exiting the international financial markets. There was resort to domestic financing. You remember all the sovereign downgrades that we had to suffer. And so we came into office with lots of liquidity, high inflation, exchange rate that was, depreciating widely. And I remember when we came in, there was talk about whether we should, cancel the program altogether. There were doubts as to whether we would be able to, carry on with the program and end it. But I'm happy to say that 8 months down the road, we have turned the corner. Ghana is back. Inflation, we met it at nearly 24%. Currently, it's down to 9.4%. We have seen a strong rebound in growth. We are running ahead of program targets for the year on almost everything. You name it, inflation, reserves build up, economic growth, we are running ahead. And we are happy to announce that we will be able to exit the fund program come next year. And so far, so good. First 8 months has been revealing. We think that we have done a good job. We are getting all the upgrades from our rating agencies, which shows clearly that we are on the right path. Let me also take the opportunity to thank the IMF for the support. We've had tremendous policy support. They've worked with us in this journey, and we intend to stay to go along with them. When we came in, we saw that we had to do a number of things. Even the entire monetary policy framework needed to be upgraded. We needed to strengthen the credibility of the central bank. There was a lot of liquidity that had built up, and so we needed to do lots of sterilization. We also needed the complementary, efforts from the fiscal authorities, and so we had to engage the fiscal authorities at the same time. And then you also needed to look at food prices. So it was a complementary effort across all fronts that has helped to, deliver the disinflation we are looking at. But we give a lot of credit to the tight monetary policy stance we have preserved. Currently, even though we are easing, we are still holding that anchor very strong. A strong liquidity management, strong sterilization. For that, we will not compromise, even as we ease downward.
Maintaining such a monetary policy stance cannot have been easy. Huh? I'm sure questions must have been raised.
Very much so. The cost to the central bank's balance sheet has been immense. To give you an idea, Almost stock currently is around 85 billion Ghana Cedis, and out of that, the sterilization we have done this year alone accounts for about 65 billion. And so, yes, but there's a price to stabilization. There's a cost to stabilization. We are in discussions with the fiscal authorities for them to assist us, probably to pick up part of that cost. But as they always say, stability is a public good. When there's macroeconomic stability, there's a cost to it. Someone needs to pay for it. So far, we are in that discussion. Because remember, at the beginning, I made that point that I needed to rebuild the balance sheet of the central bank. As you are aware, we came in to meet a bank that was, hardly, solvent policy-wise. And so that is also being tackled alongside the stability that we have.
In addition to the impact on the profitability of the bank, there must be some impact on credit growth to the private sector also.
Very much so.
How is that evolving right now in this relatively tight monetary policy environment?
So we have seen some private sector credit saw some decline. And to put it into context, when you relate
the level decline or just the rate of growth?
We saw some rate of growth, decline in the rate of growth. But that aside, it is a fact that compared to our peers, private sector credit, is the lowest, among our peers. It's one of the things we are looking at. You have a growing youth population, you have women-owned businesses that need to be supported with credit. And so going down the road, we are looking at ways to enhance that. But remember also that the non-performing loans ratio, for banks, we came to meet at a very high level. And so we are controlling that as well. We are urging banks to enhance their risk management frameworks so that even as we scale up private sector credit delivery, we do not worsen, that anchor. But it's something that we are tackling. I was surprised when last week I decided to look at the data. We have it disaggregated in terms of women-owned businesses, in terms of the geographical distribution of credit. What is clear is that it's all concentrated around the capital. And then women's own businesses need to have more of such, not to talk about the youth, front. And so the focus has to be on some sort of diversifying this range. But, that draws us into structural policy. So it's something we'll be working together with. Now that there's a return to, macroeconomic stability, this is a conversation we will be having together with the fiscal authorities to take this forward. Right, so it all started from March this year, when decision was made to have a public institution that would be in charge or in control of the purchase, the selling, buying of gold, assaying of gold, export of gold. Why? Because we noticed there were a lot of leakages. There were all kinds of individuals that were involved in, buying gold, exporting gold. Now, when those exports were done, the foreign exchange was not returning to the country. And so that's how come Gold Board, which is a public institution, was set up from March this year. Since then, they've done a tremendous job. You can imagine it from March up to probably last week. They've brought in about $8 billion just with this short time span. And that has supported us in terms of our reserves build-up. What we do is we intermediate what comes from their angle, and then the rest goes into our reserves. So yes, the Gold Board framework has been complementary, but that's not to say they don't have their own issues. As an institution that is just starting, there are teething issues that have to be addressed. But we emphasize responsible gold sourcing, and we made it clear to them. And so when they export, the foreign exchange accrues to the central bank. And so we intermediate the FX. And so it's like a revolving kind of fund that we operate. And I think so far it's been complementary, helping us to build our reserves.
So the FX comes to you and you give them CD equivalent?
We give them CDs. They use that to purchase again. And, the time span is short. Within 2 or 3 days, they're able to turn it around. And so that goes into our accounts. We decide how much to intermediate. and then the rest, automatically sits in our reserves. So we also have the large mining firms. They deliver bullion to us directly. So bullion
as part of the government's
yes, as part of the mining agreement.
Royalty.
So bullion goes directly into our reserves, and compared to when we had the crisis, there was a time we had about barely 2 weeks of imports cover. Currently, we are looking at 4.5 months imports cover. So that gives you a sense of how far we have come. We want to build more and more of reserves because, as you know, we are still a commodity exporting country. The risks remain. And so apart from sound macroeconomic policy, we also have to make sure we have adequate reserves just in case, the headwinds approach.
Wow. So if you listen carefully, you know that Dr. Pandit Johnson Esiama is mentioning things that they are now coming to put in place. And I think if these things really come in place, we are really on the right path to the better Ghana we all were praying and hoping for. Yes, because the structures they have already put in place, it is working perfectly. And by now, I know some of you have seen or heard some figures circulating on the internet. Some 8 billion. Yeah. That particular 8 billion is from the Gold Board, which is being headed by Sami Jamfi. Yes. From January to I think the 8th month of this year, they are telling us that they are able to acquire 8 billion from the gold they export to the other countries. 8 billion US dollars, not 8 billion Ghana cedis, 8 billion US dollars. So you agree with me that if this structures they are putting in place, if it continues like that, I think we are really heading to the better Ghana we are all praying and we have been craving for. Because now if you have your phone, you can just Google and know the exchange rate. Now I think if Ghana or the cedi is not on top of the African currency, it is among one of the best. It is among one of the best currencies. Yes, now our currency is very strong on the world market. It is very strong, and I will say they are really doing a great job. They are really doing a great job. If they fuck up, excuse me to use that word, we will say it. And if they are also doing their job, they are also doing the right work, we must say it. We must let you know what our leaders are doing. Yes. So there are a lot of things he made mention. There are a lot of things he made mention. But as you know, we the Ghanaians, we are now fed up with promises. So we are waiting. We are waiting for them to fulfill their promises. There we will see that indeed we are moving to the better Ghana. Okay, so this is where we will draw the curtains to an end on 69 TVGH News Exclusive. And as you know, we are going to follow each and every move or step this particular leaders take concerning the people of Ghana and also towards the better Ghana we are all praying and hoping for. So please, if you are new to the channel, kindly subscribe and also smash the bell notification. Let me know your thoughts at the comment section. Share it to your loved ones for them also to know what is going on in the country. Let's meet in our next video for me to bring you quality updates and also entertainment.